Hello everyone, welcome back to another daily forecast video. Today is 28th of May and it is the last day of the trading week. As always, on a Friday, usually I try to look for a trade in the day but not so much in the night. Or rather, in the night I will usually try to look for or try to close out my trade as soon as possible, try not to hold it over the weekend. Unless it is for a very long-term trade. So anyway, I just want to share in regards to the forecast that I have posted in the last 2 days or last 3 days. First, I want to talk about the NASDAQ. So I was talking about there might be an M shape, and of course other reasons right here, which I'm not going to go through again. But you see, as we can see how it has played out so far, it's taking a little bit too long. It's becoming more indecisive to go in a reversal as suggested by the technical analysis. So in a case like this, we kind of want to be careful, because if a formation doesn't turn out as it should be and it takes too long, usually the direction may change. So in this case, it does seems to us at the very beginning is about to fall, but if it doesn't, like right here, this is the neckline, it wasn't able to break below the neckline, then there's a possibility it will go up. Usually more than 50% chance, and that's very true. If we were to look at the oil markets, the oil charts, you see the same thing happen for the US oil. A pretty good resistance right here at the top of this entire consolidation of the range, and you see later on it forms a M formation as well, but it failed to break below the neckline. It came down, finds support, and it just goes all the way up and it breaks out of this range. So why I'm sharing this is that because in my past video, I think it's the last video, I did share about selling the NASDAQ and stuff like this. So this is for you to understand that when a formation doesn't forms, because back then it all looks great, right? But if it's not able to break out of the neckline, especially for formation like M or W and stuff, you got to be really careful. If it's taking too long and if the shape did not really form, I mean, to be very straightforward, if it looks like it has failed, then something is wrong. You may either want to cut the losses, maybe half your position, or just get out of the markets while you still have little to no loss, or probably a little bit of profits at the point of time. So in my case, of course, I've exited all of those, because obviously they are not like I have already explained, so I'm not going to go through again. So the next one is I will just want to quickly touch on gold. Right, so we are looking at gold right now. As we know that the gold has been very bullish for the past few weeks, or throughout April into May, and right now we are still seeing the same thing, just that it didn't went up as quick as we thought, which is nothing surprise. The market always have a way to change as and when, but in any case, I think higher highs and higher lows are still the kind of thing we are still seeing in the market on the gold price. So I mean, because it's taking a little bit too long, right, for the gold to continue its bullish move, and especially this Friday. But speaking of Friday, well, I think this is what might happen tonight. If we're lucky, or if I'm lucky, I will be able to see the price come down to this level, or to this demand zone. All right, because this is the consolidation, and this is where it broke out. So here is a good demand zone, and if it rebounded off from here, then we are obviously seeing another formation of a higher low. That is, if I'm lucky, I'll get a lower price. Otherwise, there's a very good chance that if we see consistent support right here at the current support right now, 1890, there's always a very good chance it will just went parabolic all of a sudden before you even know. So again, in situation like this, you have two choices. Either you just wait for it to reach this so-called a better price, also at the same time at the bottom of this rising channel that's channeling out of this major channel, or you can choose to enter half position right now, since there's a support and it's touching the support again. So it's kind of within this range, is at a lower price, and enter another half when it actually pulls back all the way to this demand zone. So these are the two tries you have, and if you really want to grow aggressive, of course you can still enter right now with the full position, but of course the risk reward ratio will be affected, and you got to take into consideration that it may pull back to this level, or it may even pull back all the way back to this equilibrium level. In other words, your risk will be higher at the same time. So yeah, this is something you got to consider. So that's my part on the gold. And next, I want to touch on the Aussie against the US dollar. So last week we have been talking about Aussie US dollar for quite a long time, and I believe I do have some forecasts on Aussie dollar as well. So maybe let's just look at it. You see, 2 weeks ago I have a weekly forecast on Aussie against US dollar, and I was anticipating a bullish trend to come out because I was very bullish on the commodity. I mean, commodity prices has been rising. It's a very straightforward sign, and it's good for the Aussie. So how has it turned out right now? Well, it hasn't failed. As you can see, it is still supported, right? It is still supported at the bottom of this rising channel. So, but of course, there's the risk of it breaking below is getting higher, because it's the longer it takes to rebound, to come up with that bullish trend, the higher the risk of it actually breaking below and going down all the way. And I think that the news that they're saying commodity prices has been kind of cooling off and stuff. I mean, partially also due to China trying to clamp down on those big corporations trying to hoard supplies. So those are just very short-term things that affect the market. The longer trend is still, we know that commodity prices is definitely still going to go up. So for Aussie against US dollar, another thing is that there's actually a formation of a head and shoulder right here. So it's like there's a head and shoulder right here. It failed to break lower, and it forms another head and shoulder. But in my opinion, and based on my experience, this kind of formation is really just consolidation, and usually such a failed head and shoulder lookalike formation, always, like a lot of time, based on my experience, it really does just goes all the way up. Later on, it will go very fast. And I think it all kind of makes sense since we are in a bullish trend, since we have consistent support.